I want to say thank you to FinTech Australia for having us here today. I'm the CEO of Intersekt Australia, and it's great to be able to talk about embedded insurance. So what we're going to cover is really this hot topic globally about embedded insurance and explore a bit about what does it mean and what's its potential to transform the insurance sector, which we all as consumers want to happen. And we're also going to talk a bit about blockchain and how that fits into the landscape and really explore the role of data and how it brings better transparency and what it means for the all-important claims time. So I'm going to ask the panel to introduce themselves and their companies because they do a much better job than I will, and I'll kick off with Nigel.
Thanks, Simone. Thanks for the opportunity. So, my name is Nigel Fellows-Freeman. I'm the founder and CEO of Canopy. Canopy is an insurance as a service platform that's kind of building the operating system for embedded insurance. And what does that mean? Building the middleware that enables any kind of insurer in the world to enable any digital platform to offer an embedded service to their customers, and so protect their customers where and when they need it.
Thank you, guys. Bill Angeletti, CEO and founder of Day by Day. Day by Day is a Web3 end-to-end insurance platform built here in Melbourne and exclusively on the blockchain. So we're trying to give an option that you can do and use and get insurance on blockchain for real-world assets.
Thank you. My name is Danny Robson. I'm Head of Product at Yaris Technologies for an InsurTech enterprise system. I'm not a CEO and founder. I've been in insurance for over a decade now, and if you'd asked me when I was 16 years of age if this was my future career, I would have said absolutely not. But I love just the breadth of opportunity and the sheer volume of issues there are to solve in insurance, which is why I'm still here.
Great, so a great panel here. So I was going to kick off with Nigel really to help explain what embedded insurance is. How is it different to FinTech, which is more focused on these sort of embedded payments, and how is it different for those that are in the insurance industry? How is this different from Affinity or White Label, which has been around for a long time?
Yeah, I think there's actually a lot of similarities to kind of embedded finance, actually. I think in terms of, the similarities in terms of how it's actioned, I think is very, very similar. I think in terms of embedded insurance itself, in terms of describing it, I was actually on a roundtable with one of the leaders in the space, a guy called Simon Torrance, a few days ago, and he, I'm going to steal his lines. I thought it was really apt, and that was embedded insurance is more and better protection baked into the everyday lives of everyone. And maybe breaking that down a little bit in terms of more and better protection. So rather than a single product, having kind of multiple products in terms of more protection and a better protection. So rather than just taking a product that exists today and delivering it to you digitally, actually how can you change the product construct? How can you actually deliver the nuanced product to the customer where and when they need it? And then think in terms of baked into everyday life. So it needs to be seamlessly integrated into the services and products that you use every day. And so rather than insurance being a disparate service that you have to go to and find, it being embedded inside the services and platforms that you use every day. And then finally, that last piece being kind of accessible to everyone. I think there's a really big kind of noble play here with embedded insurance, and that is that the protection gap is really widening, and so the gap between protection that people have and the people that's required is getting bigger and bigger. I think in 2020 there was $380 billion worth of claims, and only $70 billion worth was covered. And so it gives you a sense of the coverage gap that exists in the world today. And so I think there's some really great examples in the world of how kind of accessible to everyone is coming to bear in this embedded space. And Alipay is doing a great job in Asia, actually. They obviously kind of have a huge amount of services that are offered through Alipay. And they've delivered a health insurance product, and so they identified that there was an enormous kind of lower and middle class in China that didn't have access or couldn't afford health insurance, which made them massively exposed. And Alipay had a huge amount of data and information on all these customers, lots and lots of thousands of data points. And so we're able to kind of innovate and say, actually, we can deliver a micro health insurance product, deliver inside of Alipay using the data that we know, and kind of gave access, and I think got over 100 million customers already, and it's only a pretty new service, and so really kind of brings to bear how embedded insurance kind of makes insurance accessible to everyone. That's a really nice kind of real-world example of how that's being delivered.
Great, thank you. I think everyone's a bit more enlightened onto what we're talking about. Danny, when we talked earlier, you really explored just how big this opportunity is, and I guess what's your view, I guess, as a consumer and from where you sit in that insurance value chain on the opportunity from embedded?
Absolutely, and I concur with what Nigel is saying. You know, it's about the simple product at the right time, at the right place for the right person, and that seems to be in that purchasing journey. You know, sometimes they're making their most invaluable asset commitments, and they want to know that they're protected for that. So as I was doing some research for the opportunity in embedded insurance, this might actually be my nest egg, and I might jump ship now. So in US alone, it's a 10% percentage of that general insurance space, and then here in Australia we're actually aiming to get just over 20% by 2029. We're all numbers people, so it's a huge market opportunity, and I guess it's a $72 billion market as well. So general insurance really has to jump quite a bit to get to that embedded insurance space. And you talk a bit about those challenges that we have to get there. Well, we've absolutely got technological challenges. Large legacy systems, they take time. You know, you have to walk before you can run with a lot of these changes. It's a change in consumer habits. It's a change in the way that we manage our business processes. It's a change in the way that we manage our marketing and sales and distribution and everything. And we've gone through this huge reform to change the way that we buy, sell, handle claims from an insurance point of view, and to think that in 7 years' time that this is going to flip it on its head and completely change the way that we do it. It is a huge opportunity, I feel.
Yeah, 7 years is going to fly by, I think. Bill, how does blockchain, how does Web3 fit into all this? Is it going to support this model, or is it going to disrupt it?
Good question. Good question. I mean, I agreed with Nigel and Danny yourself as well, but I think blockchain is going to give us tools and infrastructure to add to the transparency and to the things that give us the lack of trust that we have in insurance offerings, insurance products. And I think we're building on blockchain for that reason, to be able to transact and understand what you're getting into when you're buying a policy, and what the claims process is going to be, and what the requirements on you are in terms of delivering, processing a claim. And if you make it transparent, then I'm going to say it's going to add. Now, whether we can do the half blockchain solution and legacy systems combination and call it true decentralization, I'm not sure. But if you go down and you believe in decentralization and the ability to transact almost peer-to-peer, in a sense, then I think it'll add to it and disrupt it.
Interesting. There's a whole sort of regulatory world that we live in insurance, and particularly around the sales journey. That's been sort of a big topic for insurers and insurtechs for the last few years. And the anti-hawking regulations and the requirements around that. Is that a restriction? Is it an opportunity? What do we think about that? And I guess views of Australia as against other markets. Any jump in on?
I've had a direct example. So when we started our journey in terms of day by day, and we wrote a white paper and our business plans, got all that together, we started our development and then reached out to APRA and said, we're building something here that we think you should have a look at. And this was in the first year of the pandemic, so almost 2 years ago, I suppose. And they came through and we presented and we showed them what we think where we think we're going to end up from a development perspective and our roadmap. They shook their heads. They said, well done, keep going. We can't help you. We can't advise you, and we don't know what to tell you. So I said, does that mean that in 3 years' time you're going to come lock me up when you finally get to catch up? And they said, no, regulations will come out and we'll understand more about this whole industry, and it'll be forward-looking, not backward-looking. So you might need to adjust some things along the way, but no. So at that point in time, there was not enough information, and I'll say knowledge, in the regulator to be able to advise what to do and not do.
Yeah, I think to add to that, I think we need to acknowledge that exactly that, which is generally technology and innovation runs ahead of regulation. And so just acknowledging that and knowing that there may be changes ahead is something important. But I think to the point of how does embedded differentiate or maybe improve that kind of anti-hawking, etc. And I actually think it's one of the solves. And what I mean by that is, I think the opportunity to engage with regulators and engage with the folks that are setting kind of those frameworks up is to say, actually, we're looking to try and do the right thing for the customer. And so we're looking to try and personalise and give the right product to the right customer when they need it, versus trying to kind of force a product that's not required for the customer in a different scenario where it's not really contextual. And I think that's kind of really where it kind of falls down. And so I actually think that it's potentially a key to unlock the regulator and work very closely with them in terms of being able to use data, being able to kind of personalise it in terms of N=1 and deliver it to the customer where they need it. And so I think it could be a solve, but you need to work closely with regulators on it.
Danny?
There's this general perception out there, isn't it, that risk and compliance is the naughty team, they're the red tape, they're the restrictors of fun police. But I think when you go back to the intent of risk and compliance and any of the regulations and obligations out there, the intent is often in favour of the customer and the business and finding a fair and mutual ground. As someone that led a lot of the organisational change at one of SA's insurance companies for this latest Haynes Royal Commission, that target market determination piece and being able to identify you selling the product to the right person at the right time, and anti-hawking, which is another piece that Nigel touched on, you would not believe how bloody hard it was to provide the evidence that the product was actually suitable for the person, and it shouldn't be that hard, but that's where I feel like embedded insurance is actually an enabler in this space, because the data is right there at the point of engagement. It's going to tell you whether or not and give you that immediate feedback as to whether or not it's the right fit for the person at the right time.
Yeah, great. I mean, I think that's a great sell there. We're talking about sort of technology change and particularly sort of working with the incumbents, and how, you know, a lot of these embedded models are partnering with the underwriter and then looking to then sell to the end customer. How hard is that in terms of working with them and getting them embedded in this story? Nigel?
The short answer.
The true answer.
The true answer. True answer is really hard. And I say in terms of really hard, I think it's really hard just because there's lots of legacy. It's a very complex space. The insurance market is a complex space, just like the financial services space is. And so I think in terms of, the short answer is yes, it's difficult. But I think then kind of breaking it down a little bit and thinking about it on both the supply side and the demand side. And so what I mean by that is, when we think about the demand side, is the digital platform, the company that's trying to kind of deliver that embedded service to their customer that they currently have. And they are really kind of pushing forward and forcing incumbents to deliver a service to them, because they have the scale, the breadth, the technologies to be able to do it. And Alipay is a really nice example of that. That's the demand side forcing the insurers to catch up and deliver a service to them. So I think they're forcing from top down. But then on the supply side, in terms of incumbents being able to get there, I think there's kind of three core things that make it difficult for them and difficult for people to kind of interact. And it's probably people, process, and technology. And I think probably the culture of the organizations is looking after the current business versus kind of maybe looking to the future, and often maybe not having a strategy in place to think about how it changes over the next kind of circa 10 years. And the final piece is obviously the obvious one, which is technology and the amount of, incumbent insurance that you'll speak to that are still on green writing and black screens and like kind of tech that was built from the 60s and 70s. Your policies that you'll buy today, online even, really they're just kind of forced a kind of digital form online, and that's still backed off the old systems with a layer over the top to make it accessible. And so then when you think about that, the difficulty for them and the cost for them to spend 18 months, tens of millions of dollars to give you a digital journey makes it really hard. And that kind of makes the space where we kind of sit personally is that enablement piece in terms of how can you allow those folks to get to market quicker at a much cheaper price and deliver a better service, I think is one of the unlockers. But I think these guys have got big digital transform programs in place that will help them over the next 10 years, but in the short term they need to partner to get there.
Yeah, definitely. And Bill, in your discussions with insurers, I mean, a couple of there was the big move a while ago from the big reinsurers to look at blockchain, and it's kind of fallen away. What has been your experience in?
This stuff worries me because I think what we're trying to do is merge two worlds, and it's a little bit like the DeFi and the finance industry, banking and so forth. I don't think they've connected. You know, in my experience, we talk about it, and we have some examples where they have tried. But the decentralised finance stands on the left, banking traditional stands on the right, and we've got the same thing now happening with what we've called Insurify or Insurtech in the blockchain space and insurance companies. Now, insurance companies will use blockchain type of solutions to improve claims processing, to improve and automate with AI and machine learning and all that sort of stuff. But that's not taking it to the insurify and DeFi equivalent in the banking space, where you give the power to the people and you customize and you personalize. You know, imagine having the ability to personalize your insurance for the period you want, to the assets that you want to cover for the exact event, and getting a premium for that on the go. You know, that's pretty powerful. But I'm not seeing that coming out, and I don't know what the incentive is. Are insurance companies losing money?
I think it depends on the year and the cat season and everything else, isn't it? But yeah, I guess what is the incentive and the hurdles, and you know, by definition, insurers are big companies doing lots of things, and there's a reason that they move slowly, because you want them to be there at the time of claim.
Yeah, I think on that, just to add to that, I think the only folks I've seen doing it is a 190-year-old insurer who renamed to Wacom, and they're the only folks I've seen who do kind of doing a bunch on blockchain, and all of their policy admin, all of their policy systems on the blockchain. They're the only folks I've seen doing something in that space.
Yeah, I've heard of them, but they're still doing their back office the traditional way by using blockchain to enable things, right? I'm talking about being on a public infrastructure, having public transactions, having the flexibility. You know, why shouldn't all of us have the option of investing in underwriting? You know, my self-managed super fund is happy to put some in, and yours might as well. And why don't we get that flexibility? Why can't we be owners of insurance policies that are personal assets earning income when they're used? And I've done a bit of a sales pitch there, because that's what we're building it day by day, right? So, and it's all Web3 based, which also has this something we haven't touched on, which is data sovereignty, right? So you want to be able to control your data. So you know, a broker or an insurance company can't give it out to third parties for other reasons, from the ATO to your retailer, right? Whatever it may be. So if you're controlling your own data, then you get that power back. So if you haven't noticed, I like the whole decentralization stuff.
Danny, so you've got lots of experience working with insurers, you know, at Yaris and previously. I guess what's your view on that sort of technology and data piece, and how we can move some of that faster, maybe?
Yeah, look, I see we have made movement over the last decade. We're seeing a lot more API-enabled systems. They get it. The people get it. The processes are starting to move towards that direction, but the technology piece is still, it's an environment where everyone is very risk-adverse. And you know, when things go wrong, they bloody go wrong. So being able to prepare for that and prepare for every single scenario, particularly in this volatile space of still learning what it means for us in this new regulatory space, because as Bill mentioned, you know, it's more about moving forward now. We've implemented a lot of what we think was the right thing to do, and now we're learning what we still need to improve on, and that's going to be a never-ending journey for a little while. So we are seeing slow incremental changes. I think starting with the people is probably the most pivotal. If the people get it, eventually they're going to come together, the right partnerships will come together, and the technology is eventually going to find its way. But that's the nature of the beast in the industry we work in, and technology becomes more and more complex. The more people that are involved, the more risk that is involved, and the more that the ecosystem has grown. And what I mean by that is the more systems that are connected.
We talked about data before, and we have you know, some discussions in the previous panel about the sort of consumer data right and open banking and open insurance. Is that going to be a key to unlock things? What are kind of views around that and the potential for the insurance and for each of your businesses, I guess? You wanna?
I think I touched on it before. I mean, I think the whole data thing, and we saw the cyber presentation earlier, is really important. So minimising where my data is in terms of different databases in different companies that have the ability to share it without asking, I think it's something that we should seriously consider. And the whole Facebook, metaverse, meta stuff and all that, that's really what it is, guys, right? So it's coming, and I don't see insurance companies with legacy systems being able to manage that. Now, there's lots that I don't know.
Nigel?
Yeah, I think data insurance is a data business, really, in terms of fundamentally, like kind of how you price risk is a bunch of data points and a bunch of information that helps you price the risk. And so I think data sits at the fundamental core of an insurance product. And when you think about embedded and you think about any of those kind of those services that it's trying to move towards, I think kind of sharing of data and information helps on both sides in terms of customer journey as well as and user experience, as well as kind of underwriting and pricing risk. And I think there's a risk in terms of having access to lots of information and then being able to personalize or kind of not price risks that insurers don't want to write. And that's kind of looking at it half empty, I think. But I think the half full version is kind of how can you kind of use the information to provide the right product to the customer. And a kind of nice, maybe real world example of that, I'm sure we've all kind of got, or some of us have got kind of home loans and gone through that home loan experience, and kind of open banking and CDR has been kind of enabling that kind of finance component in terms of making that kind of loan experience much more simple, shared information to help you kind of get there, write the home loan and the experience be better. And today, in terms of how does insurance feed into that, you get your pre-approval and then you've got 90 days to run away and try and find a COI and give the property insurance back to your kind of broker or your bank to be able to get to settlement. And I guess an example of how kind of insurance can feed into that data piece is how can the insurance kind of transaction be part of the home loan process. All the information's there, you've already been shared it, and so wouldn't it be great if kind of pre-approval, you've got your insurance document, you've got your COI, and you can go straight through to settlement. And that's kind of a product that we've got in market today. And I guess that's a little example of how like customer experience matched with data, matched with CDR, really can transform the customer experience. And I suppose just to add to that, and this maybe kind of punches into a little bit into the claim side, and that is kind of we're seeing a bunch of the refinance stuff that people have refinanced 2, 3, 4 times, and their replacement value on their property is 20% of what it should be because it hasn't been revalued in their insurance documents for 10 years. And so when they go to claims time, all of a sudden the house burns down and they've got 20% of what the coverage they should have. And so I think the sharing of data allows the kind of the protection to be kind of correctly kind of matched to the risk, and therefore kind of improves claims time. And I think that kind of probably speaks to a bunch of the stuff that you look at, Danny.
Yeah, and look, unfortunately, a lot of the changes that actually came in the last year or so, we're trying to mitigate things exactly like you've just described. And by ticking the compliance box, a little statement on the back page of your PDS that says, remember to check your renewal and make sure your sum insured is appropriate to what your house is worth. People don't read that bloody thing. So it hasn't really solved some of those challenges. And Rachel gave us a beautiful example as a consumer. You know, she's spending Saturday morning trawling through so many opportunities out there to find some cover, and that's assuming she understands the risk that she's at, and she does understand she's got a risk she needs to insure. What about the people that haven't even thought about it or don't even care about it? When they're taking out, let's say, a car insurance policy, they're buying a new car, they're taking out a loan for a brand new car, we should be able to provide the data that we have as an insurance company and as a claim software platform to say, did you know if this car is written off, you actually can't replace it for another 12 months at least because it's coming from overseas? If you've got minor damage, it might be in a repair shop for 6 months because they can't get the parts for it. These are just some of the examples that are happening in our economy today, and it's setting the expectations for these people that need to insure their risks. And they're getting into that policy with the evidence that they need to know and appreciate and make an educated decision rather than being surprised later on. You know, they thought they've bought this whiz-bang car and they've got this whiz-bang insurance policy with all these fancy little stickers and things to put on their laptops. But at the end of the day, it's that policy that you don't really need, or don't really want rather, but everyone needs it. And then you use it and you've got all these surprises in terms of poor service quality, delays in the claim, you're actually not getting your bang for buck, and it's not the financial gap that you needed to cover. So there's all these things that we actually know as insurers, and we're not passing them on. And perhaps there's a little bit of reluctance because we get into this space of, you know, providing recommendations where we don't really feel comfortable in doing so, and it's legal territory that's a bit ugly. But you go back to that consumer experience, and it's really that bloody simple, isn't it? It's providing the facts and getting them to make an educated decision themselves at the time of making their investment.
I think to that, like car example's got a nice, obviously we all know Tesla, and Tesla have got their own insurance brand, and so they kind of sell insurance embedded inside their car, and so they can see they've got the dual version of your car driving around, and they know how you drive, how fast you drive, how fast you brake, all of those things in terms of telemetrics, and so can ensure that risk for you, can see when a crash happens, can provide all the claim service up front. And so there's a bunch happening in terms of how, I guess, embedded doesn't just think about the acquisition component, which is upfront when you buy the policy or when you kind of get the insurance on the risk, but actually kind of how can there be prevention, how can it improve claims, and so really it's kind of part of the service or the platform that you're interacting with, versus being kind of ancillary. I think that really kind of sits at the core of how you can kind of transform the proposition.
Some great examples there. I think everyone's got a much better picture of what it could look like. I think we're almost coming towards time, but I wanted to see, was there any kind of questions for the audience? I've got one big hand up there. Yeah. He's running around.
Thank you. Thanks to the panel and Simone. My name is Sander. I'm the founder of Intersekt, a Singapore-based startup moving into Australia. Embedded insurance works really, really well. The example I like best is if I go to Singtel and I buy my roaming data, that travel insurance is just included. It's just there. That works, but only works if you can manage the costs associated to that. In a Web3 environment where I own my own data, and I love to do it in smart contract firms like we're building ourselves, how do you guys manage costs?
How do you manage costs in terms of?
Making embedded insurance manageable in that way, so it's scalable.
Making it manageable in Web3 with smart contracts,
Yeah, by keeping your costs down, right? If you want to include this automatically, you need to make sure that if I include my embedded insurance in simple and short-term service contracts, for example, the actual execution costs, the cost of creating the contracts, executing these contracts needs to be low. If I want to add it into the blockchain, my costs for that, for adding it into the chain, should be manageable. How do you guys manage that?
Well, I'm not sure what you mean by if it's based on a smart contract,
Yes.
and the rules are defined at the point from not only what you're covered for, but the claims process and all the ancillary stuff that go with it at the front end. That's a one transaction on the blockchain until you transact again against that smart contract. So those things can be easily defined at the front end and implemented in mass. So I'm not sure why you're saying manager, because the back office isn't what the normal back office is today in an insurance company, right? So you don't have someone processing it, you don't have someone doing the data entry, you don't have someone doing the spreadsheet to say, look, he's extending by a day and so forth, right? So our business is called Day by Day because the vision is to be able to adjust the premium every day, yeah? As you add assets to your house, or you add assets to or additional travel time by kilometre if you want to do car insurance and so forth, your premium adjusts, right?
I think that's a great answer, Bill. Thank you.
Any views? Any other questions? Otherwise, I'm going to ask each of the panel really to give us a bit of a vision for the future. Where do you want to see it going? Where do you want to see insurance in this sort of ideal world? And, you know, what can we do to support sort of insurtechs, which, you know, I believe are going to help that whole process happen. So maybe I'll start with you, Danny.
Yeah, absolutely. We've talked about some of those technological constraints, and we are moving in the direction that we need to, but I think some of those startups or smaller organisations absolutely have the upper hand at this point. The incumbents will need to get to a position where they need to either keep up or overtake and move pretty quickly, and I think we'll see that fairly shortly in the next few years.
My vision is pretty simple. I want to be able to insure what I want, for how long I want, when I want, and get it on the go.
Control back to you. Control back to you from the insurer.
I think embedded insurance has a pretty noble vision. I mentioned it right at the top, which was that kind of embedded insurance kind of giving more and better protection baked into everybody's like everyday lives and it made it more accessible for everyone. I think that kind of noble cause of closing the protection gap and allowing kind of everybody to be protected where and when they need it, I think is a pretty kind of strong kind of reason to get up every day, and a pretty strong reason to think about what the world could look like in 10 years' time, that kind of people that don't currently have access to the products that they need do have access to it, and we're all each individually protected for the things we need to be protected for, and that kind of done in a beautifully seamless way, and it moves away from being a purchase that is grudge and that no one likes to think about, but actually is just seamlessly integrated on our everyday lives. I think that will be and with that, then it protects us at claim time. And so I think that's the kind of vision for me, and I guess the vision for kind of why we're trying to do what we do.
Beautiful insurance. Yeah, that's what we want. I want to really thank the panel. I hope it was a really useful discussion. I'm sure they're all around. I'm sure they would love to tell you more and meet you all over the next period. So thank you again for everybody.
Thank you.
Thank you very much.